Hey, this is Doug Field along with Brent Macy. Welcome back to Healthcare Consumerism Radio. And joining us on the program today is a new affiliate member that we're proud to welcome into this conversation. And Carlos has been on the radio with us before, but Carlos Ferrera, COO of Solstice Benefits. Carlos, good morning to you.
Good morning. How are you?
We're great, thanks. Great to have you here. I really appreciate you having joined us, and appreciate having you as a new affiliate member of the Institute. You're doing a lot of innovative things with voluntary benefits and marketplaces. Give a little background to our audience, please.
Sure. Thank you again for having me. We started out as an insurance company quite a number of years ago, and with the onset of the Affordable Care Act and consumerism, we branched out into private exchange. Our purpose, our exchange, and the reason we built it was targeted a lot towards the middle broker. They're squeezed out due to either the Affordable Care Act on the low end, whether it be state-driven or federally funded, or at the big house levels. Mm-hmm. The everyday broker is being pushed more and more towards trying to get more and more business from these large houses. Right. Our exchange is focused, again, from their perspective, so they can private label and have their own private exchange and add value add to their groups.
Mm-hmm. Now, Carlos, when you look at this is Brent. When you kind of look at the space right now, and you look at the brokers out there, and as you mentioned, are trying to add more things to their toolkit that they have. What products do you see them adding to their toolkit post-ACA?
A lot of them are pushing the dental, the vision, and the life. Mm-hmm. And unfortunately, from the client's perspective, it creates a lot of administrative hassle, because each one of these new products that they're trying to instill in the employer groups is causing more invoices to be generated and more adjustments for every single employee that gets added, termed, etc. But that's what we see on the ancillary benefits. It's more of the dental, vision, and life, and different offerings of each one of those. It's not just a dental product. It's usually two. It's not one vision product. It's two. And life, it could be anything from LTD, AD&D, etc.
And so, Carlos, does the exchange environment that you're providing to these brokers thus help both they and their employer clients better manage this administrative burden? Is that one of the assets?
It is the highlight of our private exchange for the brokers, because what we've created is a single source billing.
Good.
So the employer, the HR or chief financial officer, whomever it may be administering this, only needs to make an adjustment per employee one time, and it downstream to all different products. As a single source billing, as a third-party administrator, we then allocate the funds and submit the eligibility to each individual carrier by product, etc.
Carlos, this is Brent. When you look at the brokers and what they're doing right now, they're trying to attract new customers and obviously keep the customers they have. What are some ways that brokers out there can create, those long-term customers? Is that through an exchange, or are there some other ways that they can create that long-term customer? And also, how can they bring in some new customers into their business?
Interestingly enough, we've lived in a service model for many years now, and as we look at the technology that hits us, a lot of companies are thinking, well, are we a service model or are we a technology model? The reality is that all service is becoming a technology. With the increase of private exchanges, as you see the booming technology out there, more and more organizations, especially in that middle market, are going to be using technology, and those brokers who have that ability to supply that to their employers are the ones that are going to be more successful, not only from garnering the loyalty of their customers, but also the ability to add more and more benefits and more products to their portfolio.
Carlos, can your exchange platform be customized to include the major medical side, or are you completely staying away from that and focusing on the supplemental, ancillary, voluntary exclusively?
No, the exchange has both. It has either standard medical plans already there in several states, or a broker can put in whatever carrier they want on both medical, dental, vision, and life products as well. So we don't limit the agent to just a carrier or two. If an agent is familiar with a particular carrier from whatever one of those products, he or she can upload those products and move forward and offer them accordingly.
Excellent. Now your exchange also can work in conjunction with, let's say I'm ABC broker and employer, and I'm not moving my major medical plan to an exchange. I'm going to do a full replacement HSA program, but your ancillary, voluntary, and supplemental exchange can work in conjunction with that same employer offering, right? They can go get their...
Absolutely. It can be just by itself on the ancillary, or it can combine all of that pieces on the enrollment side.
Yep. We
have tools that help not only the employer but also the employee, from educational materials, high deductible plans, FSA, HSA, etc., and how that they can navigate through what those things are with all those acronyms, especially at the time of enrollment.
What do you see, I'd be curious with your expertise and what you guys are doing around innovation, what do you see happening this fall in the exchange environment?
Well, from the brokerage perspective, it's booming. We have gotten a huge amount of requests from the brokerage agency across the country clamoring to get these exchanges in place and having them move forward sooner than later. We expect a huge boom on enrollment, not only on the individual side, but also on the group side, preparing for 2015. Obviously, 2016, with the onset of new regulations from the federal government, we even see an even bigger growth.
Yeah, that's what we see too. Yeah, that's why we're excited about Forum West coming up November 10th, time to kind of give our market some perspective on what's happening this fall enrollment, and actually a strategic look, because we think if there's a lot of reaffirmation coming out of this fall, and I think there will be. There'll be challenges too coming up, that 2016 is the big explosion year in this space.
I would agree with you, and I look forward to that West Forum as well.
Yeah, Carlos, and you guys are actually going to be participating with us on a workshop that's really focused on the change of ancillary and voluntary benefits in this whole fast-moving healthcare consumerism marketplace. What do you see specifically around the ancillary products, how they're changing and adapting themselves with all the change that's taking place in the market?
It's very reactionary, especially on the life products. I tend to compare it to the Amazon.com of the world when it comes to those types of benefits. There are so many different variations of what's out there from an ancillary perspective, and each individual where they used to enroll with an enroller is going to have to be able to see on whatever enrollment platform they have the educational material to make an engaged decision rather than just pick whatever is out there. So the agent is going to have to supply a lot more educational material, a lot many more tools, helping them from a long-term perspective, and what questionnaires to the employee. How is your lifestyle? Do you smoke, not smoke, etc. Those are the standard ones. But what is your long-term goal? Almost like a financial planner, so that someone can make an intelligent decision.
Yeah, Carlos, did you see on this first phase, this fall with some of the first implementations taking place, that the brokers and employer clients are staying initially focused on those core supplemental health? You alluded to dental, vision, maybe some gap, maybe some accident, and life, keeping it pretty close-knit and not getting off. I mean, I know identity theft is coming. I know they talk about pet insurance and other things, but staying to some of these core supplemental health, and then the life product, too, I think is very important.
I agree. It is a transitional period, and we still live in a world of uncertainty. I would expect in the next couple of years a lot more of the individual products will be there, where they're not going to be from a payroll perspective, but actually billed individually to the employee, yet an employer can say that they offer all these benefits are out there, and again, it's a marketplace, and they get to pick and choose whatever they want, yet the employer may not have to worry about the administrative burden of having to deduct from payroll.
Carlos, where do you see disability? Because it's that risk product that sometimes is ignored, and particularly would be concerning that consumers have to go out and now make that choice. Where do you see disability in the mix?
Both as an employer and as a supplier, I see that continue to grow, especially with the baby boomers getting older and older. We face a mortality a lot sooner, especially as we see our parents, yet we live a lot longer, and we want to be able to live a more fruitful life. Yep. So that has become a pretty hot commodity, for lack of a better word, within the insurance space. And a lot more people are offering it, and a lot more employees are selecting it as well.
So would you see the same thing with long-term care as well, then?
that one is exploding, absolutely. I can't tell you how many times, if we look at our enrollment and look at trends last year versus this year, who heard of long-term care 5 years ago, and now it's in vogue.
Carlos, and going back to the brokers, and just the way they make money, whether it's from putting these exchanges in place, are there certain ancillary products, that they can put in place where they're going to see higher revenues, or are the revenue streams, similar across all these different products for the broker?
It depends on the broker and what his or her expertise is. I've seen a myriad of those that are looking, obviously, for the higher premium. They get the higher commission, like products such as dental. Mm-hmm. In life, the commission is lower, but they're able to push that a whole lot easier, especially for an employer group that doesn't have a varied amount of benefits, where typically you had an employer that offered medical, maybe dental. Now, in order to give a much bigger portfolio as an employer, you can then add the vision, the life, LTD, critical care, cancer, etc.
Now, Carlos, we got a couple minutes left on the program, and really want to, let you leave the audience with 2 or 3 really good takeaways on, if I'm looking at an exchange, what are some things that I need to, what are some questions I should be asking, and then if I'm looking at, the ancillary products, what do I need to be asking around those products as well?
Well, the first thing I would look at is the flexibility and the educational materials on an exchange. What tools are there that are going to help my employee make an intelligent decision that they're going to be happy with? At the end of the day, the employer is still representing these carriers as their carriers of choice, and the carriers must be able to give out a really good benefit. If the employee doesn't know what they're selecting or are misinformed, they're still going to, for lack of a better word, take it out on their HR person. Mm-hmm. From a benefits perspective, obviously the most selected one after medical is dental, and followed by vision and life. But as we get older, every one of us is going to have to make a decision as to what's more important for us, whether it be a financial decision with a life insurance. Can that create wealth for my children, or do I have to worry about my health today and my children's health?
And Carlos, let them know how our audience can find you.
Sure, it's www.solsticebenefits.com.
Yep. And Carlos, hey, we really appreciate you joining us on the program this morning. Have a great long weekend. And to everyone out there, Solstice Benefits is an affiliate member of the Institute for Healthcare Consumerism. You can find information on their company on our website as well. And as I mentioned, they will be participating in a workshop with us out at IHC Forum West November 10th through 12th in Las Vegas. And you can sign up to attend that workshop. You're going to learn a lot about what we just discussed here. And again, we have the $99 Super Saver rates, so definitely go sign up for that. Again, Carlos, thank you so much for your time. And to the rest of our audience, stay tuned for the next segment of Healthcare Consumerism Radio.
Thank you.